we all have biases and we have time frames, right? And some people are sitting here probably looking at shorter term than daily charts all the time. But I really encourage that no matter what time frame you're operating on, you need to look at least one longer, right? So if you're always watching daily charts, you need to see weekly. If you're always watching weekly, you need to see monthly. But so I like to use slopes of moving averages. And so,
Mm-hmm.
Justin, you've got the 34-week line in there. Maybe you could just kind of point out where it's kind of there, it's hidden amongst a bunch of lines. But to me, on a weekly basis, when we've got a long-term stock that's been outperforming, which definitely Lilly was, and it went through a period of consolidation, and now, I mean, it's basically back at highs. So what ends up happening is at some point, of course, there's weakness, right? That weakness starts short-term, and then that weakness, in this case, turned what I would call intermediate term, and then started to put some question marks as to long-term. But it spent a whole bunch of months in a base and started chopping around, and so that it's below the moving average. At the same time, that 34-week moving average that you've got there buried behind price is actually falling. So when I'm like, the problem with moving averages that I think some people get turned off with is that, when you're dealing with, is it above or is it below? You have whipsawing that happens, especially when a turn is happening. So when something first turns above a moving average, doesn't really matter what average it is, the chance of it coming back below is way higher because essentially you're right on the average. Right. And so it takes some continuation, if you will, to see the moving average kind of take hold. So the slope of the moving average is actually referring essentially to what direction is the average itself going. So if you look there in Lilly, I think you'll see that the green moving average, which we came back above there, what is it, the end of September? That bar, there's a blue bar there. Just to the
Yeah.
left of
So,
there. Just to the left, I think you
oh
first
yeah,
come
yeah, yeah.
above. So there you are
Right.
coming above the 34-week line. So let's say that I'm like, okay, I know the monthly chart is still fine, which I do know that's fine. You don't have to put it up, but I know it's fine. So when we
Mm-hmm.
now are popping it back above that weekly trend line, which I'm going to use my 34-week line, and then we have that first pullback against. In fact, look, 3 weeks after that, that's the first pullback after a bit of an impulsive bar. And now the stock comes back to life, and now the average is rising again. So now we've got a stock that's in an uptrend, right? And it's at highs, and we already know, again, the monthly chart is strong. So, but you have to know that to sort of be able to see with that kind of nuance, if you will, looking at Lilly here on this weekly chart. And I think the
Mm-hmm.
problem a lot of investors have, because I can see the ramble online, is just that everybody is so zoomed in and debating about, this stock is not going up. But we're talking about today was a bad day, and that has no necessarily relevance to the bigger picture. I
Right.
mean, not every stock peaks out just because it goes down today, right?
Mm-hmm. Mm-hmm.
And so that is a problem. And I again, that's why I can't encourage enough the idea of having a process that allows you to ensure you're seeing things in the bigger picture. You don't need to act there, but you at least need to know what direction you would want to act in, right? So if Lilly is rising, then we'd want to evaluate pullbacks while it's rising. If Lilly is falling and we're holding on to falling merchandise, we'd want to evaluate a rally as an opportunity to perhaps lighten up if that's what we're doing and we're caught.
Mm-hmm. Mm-hmm. Okay, that was perfect because again, I think that really introduces that a great example of what you just said with that. Oh, it pops out the first pullback opportunity.
Mhm.
Again, going back to kind of the international side, you brought up Canada, you brought up the emerging markets. This is EEM, the MSCI emerging markets. Certainly, a big part of that is China. And if you look at the weekly and it's like, oh yeah, okay, this isn't an uptrend. It's kind of right there at its 34-week and its 40-week moving average line. But you look at the monthly, and this has just basically done nothing for over a decade. So at some point, people start thinking, well, it's due, right? It's due to go. Of course, there's always people on the macroeconomic side saying, look, I've got a bias against China because they went through this whole period where, they were potentially going to be delisted from the U.S. And
Yep.
there's always these issues. I mean, we just saw that with, what was it, Trip.com today. Regulatory something comes out and bam, the stock is just hammered. So, what's your take on kind of, again, just as get back to China itself? This is FXI, which is a iShares China
Yep.
ETF, as an example.
So I mean, again, you've kind of highlighted almost the one country that I definitely, I've been burned many times before. Chinese stocks are definitely fraught with what I would call the most, like, headline risk is big, right?
Yeah.
There's the delisting, there's the regulatory, there's the whatever, and they all move. It doesn't matter whether it's like, Chinese insurance and Chinese tech,
Yeah.
they're all just going to move, and they all
Hmm.
sort of trade the same way. And I think nobody admittedly wants to get locked into a trade, like remember, Russia stocks were trading and then they essentially just stopped, right? They weren't even
Yeah.
trading in the US, which is a
Hmm.
problem. So going back to the China, but when you start to dig in, you start to look at some of the bigger companies, maybe put Alibaba up there, right? So
Oh yeah.
BABA. When you look at the weekly chart, let's just like the monthly chart, I think we have to say is rising in the last couple of years there. But if we
Yeah.
go to the weekly chart, that looks like an uptrend to me. I mean, I'm pretty sure it
Hmm.
is an uptrend. Higher
Hmm.
highs, higher lows. And so you can see there that the bottom line is that, in an uptrend, if we're now sitting here and we're arguably doing better than the FXI, because I think if you plot BABA versus FXI, you'll see it's
Absolutely.
in a clear uptrend. So what we've got is a leading stock inside of China. And so rather than necessarily kind of over diversifying, if you will, here we can participate in a pretty clear uptrend. And so we just had a pullback, as you can see, on a weekly basis. And so again, because we know the monthly chart of BABA is strong, because we know the relative strength of BABA is strong, what we can
Hmm.
do is we can say, wow, we just had a multi-month pullback in a clear uptrend. That's an opportunity to buy with a lower risk point than we would have to do if we get caught chasing. Because I'm not a fan of buying into that. That 21% is labeled there. Like
Yeah.
you will not find me chasing into, this concept where we've had stocks gone up for, 9 weeks in a row and suddenly I'm a buyer. Like that's
Hmm.
just not the way I'm going to approach it. Right.
Yeah. No. Hmm.
I'd like that pullback against where we can continue to observe whether the pullback is calm, whether it's collected, or whether it's erratic and violent. And again, could a headline tomorrow morning shock and move Alibaba? Of course it could.
Yeah.
But we're open-minded to that. We still have to manage risk. But
Hmm.
that's how I would kind of approach it. So there's a lot of stocks in China that are actually behaving very well. And again, I think it's also important to understand the character of every stock is so different. I mean, this is a very big stock. If you were to contrast this with, I don't know, Billy, we're not
Yeah.
talking the same kind of, let's say, market cap. And so when you have to understand what you're involved with, right? So this is a much smaller company. It's still big, arguably,
Hmm.
but this is a much smaller company, and the volatility of these shares is so much higher. So as investors, we have to make a lot of choices. Do we want to invest in stocks? Okay. Do we want to invest in China? What kinds of stocks? And by screening amongst things like relative strength and volatility, I think we can start to get our kind of decision making in line and start to say, okay, I would be interested in this, but I wouldn't be interested in this, which is
Hmm.
important.